Hello everyone, and welcome back to another episode on Velocity Channel, where we talk about and absolutely solve problems using the Velocity banking method. And we just want to get right into it. This is a very, very important question that we are posed here. But before we get into that, okay, oh man, it's going to be juicy. All right, like, share, and subscribe so that the economies of the world can recognize all they need to do when others contract and are in fear is expand. Let's get back into it. How do you live? And this question is by Bibbidi. How do you live with all your money tied up in this vicious financial cycle? Let me say that again. How do you live with all your money tied up in this vicious financial cycle? Always remember this, folks. When all the other people are losing, there's someone winning somewhere. When others are losing, there's someone winning somewhere. 100% of the population is not losing. Someone is making financial gains off of this crisis. You just need to be that person. And I'm going to show you how to do it. All right. So when everyone else is screaming, oh, yeah, sell, 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 sell. You know what we call that in the stock market? When the stock market falls, it's getting discounted. And so now, when it bottoms out, you can now buy the stock at a discount. Now, you're not going to buy just any stock, right? You're going to do your fundamental analysis. Okay, you're going to make sure the CEO is straight. You're going to make sure the company's price and earnings ratio is legitimate. Okay, and you're going to do those things that are necessary. You're going to read up on that company. You're going to see that they have a strong management team, and you're going to see that, hey, we can bounce back. We're not going to contract like everybody else. We're going to be like that one guy and expand, huh? And you're going to be winners because of your fundamental analysis. And so, how do you live with all your money tied up in this vicious financial cycle? Listen, you don't. You use the velocity banking method, and this is what I mean. Let's say you got the $5,000 right in income and the $3,000 in expenses. Are you still using a checking account, folks? Are you still doing that? That's what she means by vicious financial cycle. So if you're keeping your money in the checking account, this is what your money is doing. Look at this. It's going down, down, down. Why? Because inflation. Huh? It's not at 9.1%. It's way higher than that because there are factors that they haven't factored into that 9.1% inflation. All right? It's like 50, it's closer to 15, 16% inflation. All right? Now look. This is what you want to do. You want to go ahead and you want to make sure that the $5,000 goes where? Into the line of credit. Now, you can't do that if it's already full. So what do you have to do? You've got to spend, right? So let's go ahead and say you've got a $10,000 line of credit. Listen, do you have any loans that you need to swallow up? Okay, good. Swallow them up with the 10K. Turn that amortized loan, turn that thick money cash flow draining loan into your new checking account by placing all the $10,000 and chewing up that loan. Now you have a $10,000 balance on your credit card. And you may say, but CJ, my credit card is at 21% and that loan is at 3%. Yes, but I dare you to ask your bank and write it in the comments below. Is it amortized? Is it a scheduled payment? Or is it simple interest? And does the principal change when I pay? Ask him that. Ask him that. They'll probably look at you and they'll be like, have you been listening to CJ? Have you been listening to the Velocity channel? You probably subscribe to him, don't you? He's costing us dollars. Listen, folks, the simple truth is you're working with the banks. They're making money and you're making money. It's just that when you make money, you get a raise that is voluntary, that's based off of your credit score. This is what I mean. When you walk in and you get that credit card for $5,000, if you're good and you're utilizing the velocity banking method well, you'll get a raise of $5,000. You could get a raise of $6,000. You could get a raise of $10,000. What do I mean? You could become a victim of the credit limit increase. And what can you do with another $10,000? $20,000 credit card, a $20,000 line of credit. Yes, but CJ, I said 21%. Have you ever multiplied 10% by 21%? I dare you to multiply. It's very, very minimal, especially against a loan. Okay? Folks, this is what I want you to do. I want to switch out. I want you to switch out your loans. And you say, well, I can't switch out a loan. My car loan is at $20K. All right. Well, then go ahead and put a big chunk from the line of credit all the way to this principal. It doesn't matter if it's $5,000. Okay. You're eating away at the principal. Now keep making those monthly payments. Let's say the monthly payments are like $300 a month, right? You're going to keep on making those monthly payments. All right. As well as chunking away at that $20,000. Because when you take, let's say $5,000, okay, $5K, and you place it here, you now have only $15K, right, to get rid of. And the interest has dropped dramatically, okay? So with that, I want you to do something. Tell me how you're going to pay that $5K back. Well, I get paid. And instead of leaving my money in the checking account, because I can't direct deposit it to a credit card account or a line of credit, I can deposit it into my bank though. Instead of leaving it in my checking account, I can actually put it towards my line of credit where it'll work for me instead of me working for it. Exactly. Good job. So what you're going to do is you're going to replace that $5K with your $5K. Now, you're back at $10K. How did that happen? You say, well, yeah, CJ, but I still have to pay. Yes, you do. But remember where you're paying from. You're not paying from your checking account. You're not paying your expenses from your checking account. You're paying your expenses from your new checking account, which is the line of credit. You're taking your stagnant, swampy cash from your checking account and you're placing it inside of your line of credit where it's working for you instead of you working for it. It's working way harder than you are, folks. All right? So make sure that you're utilizing this method to the maximum amount, because when you're paying your line of credit, remember, you can have that money. That's your money. You could spend the $5,000 when you've placed it inside your 10K. That's why I'm puzzled when people say, man, the credit card is a bill, or the line of credit, that's a bill, that's another bill. No. Well, it's only a bill if you don't know how interest works. Have it work for you and not against you. And that's why we have the First-Lien HELOCs as well. For those that are struggling, with their mortgages, replace your mortgage, okay? We have exactly what you've been looking for. I want to consult with you and make sure that you have the class as well, the Velocity Banking 2.0, which goes over in detail how to do the velocity banking method. And we also hook you up with a special surprise. Let's go ahead and do exactly that. All right. Search in the description below if you want to start a business and you're looking to build some business credit, or even if you want to get with plastic. Man, we got it all. All right, folks. God bless, and you have a good one.